Recently, Henry asked me, could you please simplify the definition between support and resistance and supply and demand? In this video, I'm going to go over some examples for you so you can truly understand what the difference between supply and demand and support and resistance is. So without any further ado, let's get into it right now. Hey, what's up you guys, this is Irfan here with smartyincubator.com and welcome to another video. In today's video, I'm gonna go over GBP/JPY chart on a 5-minute time frame. Sorry, this is a 15-minute time frame, and show you some examples. It's very simple, guys. You don't have to overcomplicate it. It's super easy. You just need to understand the definition of liquidity, what liquidity is, and how banks and institutions trade, so you actually trade according to them, not regular retail traders that are constantly getting stopped out. So support and resistance, as you know, there are the highest points and the lowest points. So it means that whenever the price has some rejections or it's tapping a certain area like so many times, it's creating support and resistance. So for example, on GBP/JPY right now, I can see that we have a very high point here, and we have a low point in these areas. I can literally see the highest and the lowest points. What I mean by highest and lowest, I don't mean that you zoom out and then you just identify these levels right here. See, I'm not talking about these ones right here. Every single move right here can create support and resistance levels if you break it down in a lower time frame. But right now, on a 15-minute time frame, guys, if I want to show you an example, this is one example for a very good resistance level. See, this is a resistance level. Support level is exactly below that. So this is it's like supply and demand. This is a support level. Why are they support? Why aren't they why aren't they demand? Why are they support? There's a difference between support and demand. Demand is where banks and institutions take their trade and it creates order blocks or gaps. But regular supports are created by the rejection of the price. So for example, in this case, we don't have any high probability order block because there's no gap. I'm going to show you some examples. Don't worry about that what order blocks are, how to find liquidity and this kind of stuff. Because right here, we have so many rejections by these candles here. See, there's so many touches. There's so many small touches. So it means that this area is being respected and it's creating support level. And what I want to show you right here, which is very important, is this dollar sign here. It means that there's so much liquidity underneath this level. Why? Because so many traders, when they see such a setup, they take their long position and they put their stop loss here. So wherever their stop losses are, it means that liquidity is over there. So it means that banks and institutions are planning to go towards that level and then stop out every single buyer or seller and then change the direction of the market. And this is how they exactly can do that. If they're not stopping you out, they don't have enough money to change the direction of the market. And that's exactly what they do. So when you buy here, you gotta be careful. You gotta be super careful because you're gonna be part of the liquidity and you get stopped out. But in this case, it just got rejected so many times and then it changed the direction of the market. And as you can see, even right here, we have a very important resistance level, because this is our support. This is our resistance because it's counted as a high point, and even here we have so much liquidity. So the price literally liquidated anyone who sold here. All their stop losses are gone, and you got to be, as I said, you got to trade according to banks and institutions. So these are the support and resistance levels. They're so easy, guys. They're so easy to identify. Just try to find the highest points and the lowest points and use your tool to kind of identify every support and resistance. See, because the price dropped, it has a break of a structure and it tapped into this zone and it went up again, and then again it came down to tap into this zone and it created a support level. That's how easy it is. If you want to make it even easier for yourself, you got to see how many rejections that a certain area has. Like if it has more than 2 to 3 rejections, it means that that zone is valid and the price is respecting that zone and is creating either support or resistance levels. So I'm going to show you more examples for that. that I prepared right here. If I want to show you, let me just reset my chart. So for example, here we have a very strong support level before the break of a structure. So if I do a little replay, you see that if I draw this zone, it had one touch here, and then the price went up, and then it came back, tapped into this zone again, and then it went up. So it created a very clean support zone. And then if I just move it forward, you see the price tapped into this zone one more time. So we have 3 touches right now. So it means that this is a valid support level because it's based on rejections. You gotta be careful with that. It's not supply or demand, it's support. And since it's actually below the price, it's support, and by the time it breaks through this support level will become our resistance level, because now the price is below that. Before that, the price was like above this level, and this was our support level. Now it's at resistance level, and this is the definition of support and resistance. And a lot of people, including me 2 years ago, used to buy around here, put our stop loss here, and our TP right here, and in less than 15 minutes we get stopped out. And that's how I lost over $26,000 in less than 6 months, because I was constantly trading using this strategy. I had a very bad mentor, and he was, I don't know what his plan was, but obviously, you know, he was planning to take all my money, because that mentor was from a broker that I was working with. Terrible. I'm not even talking about it anymore, but this is what happened. So you got to be careful, guys. You got to trade according to banks and institutions, not according to retail traders. So this is the definition of support and resistance, guys. It's very important. Just see how many rejections a certain zone has, whether it's support and resistance, and then you can see that whether it's a valid one or it's not really as strong. So whereas order blocks and supply and demands have different definitions. So I'm not gonna remove this. I'm gonna actually keep it for you, so you can take a screenshot, or you can backtest it yourself. Just go check it out, the highest points and the lowest points. So for example, even right here we have so much liquidity, so we can see that maybe the price is trying to reach this level to stop out all the buyers, because we have so much liquidity here, and this is what the market is constantly doing. We don't know, we'll see. Yeah, exactly. See, it broke into this level right here. Even right here we had a very strong support level, because we have so much liquidity here, and as you can see, the price broke to this level, grabbed all the liquidity. Now it's probably changing the direction of the market. And if I want to show you what happened after that, you see that it just kept going down, sorry. So as I said, the market is constantly doing it. Be careful not to be part of the liquidity grab, otherwise you constantly get stopped out. But what is supply and demand? How to identify gaps? How to identify order blocks? First of all, I have a video for that. It's my first video on my channel. I highly recommend you to watch that. Pretty much every single video that I put out on this channel is about gaps, order blocks, even my live trading sessions. I highly recommend you to watch those videos as well, because this is what I trade based on. So I take my profit in front of you, I take my loss in front of you, so you can see everything, that what a strategy I use. I break it down too. So what is this blue zone? So these green ones that I drew means support and resistance. The blue ones are the gaps and order blocks. So if you look left, you'll see that, let me just do a little replay. Okay, you know that right here we have a support level, right? 1 touch, 2 touches, 3 touches. Sounds good and looks good, because this zone is being respected, and we had a shadow here that kind of closed below this zone. So it means that all the liquidity below this candle and this candle has been grabbed, and we don't have anything left. But this is a support level. But right after that, when we had this bullish engulfing candle and then the rejection, we had a huge push towards upside. So what does it show you? Like, when you have such a huge bullish or bearish engulfing candle, and it doesn't matter if it's bullish or bearish, what happens after that? What is left? Gap. Yes, you're right. And if you look at the next candle that already opened after that, you can see the gap between this candle and this order block. But how did I draw this order block right here. It's very easy, guys. If you're looking at the bullish market, if you're analyzing the market based on the bullish momentum, like here, you got to take a look at the candle before the huge move, which is this red candle, and you're gonna see where it opened and closed, because there's a difference between a high probability order block and a low probability order blocks. So in this example, you just need to take your rectangle tool and then draw the entire candle before the bullish or the bearish engulfing candle, which is this one. This is our huge move, and the candle before that is this one. So what matters right now is that where the second candle opened. As you can see, it opened right here, not here. If the second candle opened inside the order block, it makes this order block a low probability order block because there's no gap. But in this scenario, we have a gap between this candle and this zone that I just drew here. See, there's a huge gap here. So that's why this zone is a high probability, it's a high probability order block. High probability order block. So what do we do next? Okay, regular traders, what they do is that they say, okay, we have a, let me just change the color of this because, you know, this is our order block. I'm gonna draw a resistance level here. This is our resistance level. Why? Because we had a break of a structure, we have one touch, two touches, and if you want to say this one, it's actually three touches, but two major touches. So it means that we have a valid resistance level that now is our support level. So what they do is that they wait for the price to come down to this zone, and then they take their long position. But we'll see what happens. But they don't pay attention to this high probability order block. This is where banks took their trade, and that's why we had a huge bullish momentum. When we have such a thing, it means that institutional banks are in the game and they're taking orders. So what you need to do is just wait for a price to come back to the same zone to fill in all these gaps that are left over here, and then you see what kind of momentum it gives you, and then you take your position. Sometimes it blasts through this order block. I'm not saying that it works 100% of times. I would say 80%, but you gotta wait for a momentum. Whereas the other people, they put their buy stop here, sorry, they buy limit here, they put their stop loss here, and they put their TP here. It works sometimes, but I personally wait for a more confirmation to see where it actually closed, what happens to the next candle, and then I take my trade. So if I want to show you what happens here, the price is just going down, like it's just keep going up, grabbing all the liquidity here. See, we have resistance level here, we have resistance level here. It means that we have liquidity here, we have liquidity here. This is where sellers put their stop loss in, and we just wait for the price to come down. See, this is where most of the traders take their trade. Sometimes it works. I'm not saying it doesn't work, because we have a very good support level, and if you want to use Fibonacci, you can literally use it from here to here, and then from here to here. And then you see that it's tapping this golden zone here between 50% and 60%, and it's rejecting this 60% level. So it means that it's kind of valid. But let's see what happens after that. You know, the price is going up, it came down, tested it again, and now it went beautifully, no problem with that. So what happens to this order block here? It's still not filled in. So it means the price has eventually come back to this level to fill in all these gaps that are left over, tap into this order block, it whether blast into the order block, or it gives us a bullish momentum, and then we can take our long position here. But if you want to trade based on a regular support and resistance level, this is one of the ways that you can do that. But in most cases, the price tends to tap the high probability order block and then change the direction of the market. In this case, here we come lucky, I would say. And if you wanted to trade based on the Fibonacci, that was a really good zone to take your buy order. And then we wait. See, this is where it actually tapped into the zone, and it gives us a very good momentum right here. So if you put your buy stop here, your buy position here, and your TP here, you see that it literally tap into your TP 1-to-1 risk reward smashed. So it means that this zone is being respected, which is our high probability order block. Why is it a high probability order block? I'm going to repeat it so you can understand better. Because of this huge gap that happened between the next candle after this bullish engulfing candle and the candle before that. So there should be a gap between this and this zone right here. If the next candle opens inside the order block, then it becomes a low probability order block. And if the next candle after this huge move opens inside of the order block and has a shadow outside of this order block, it becomes invalid completely. So this gap should be respected. I hope that you understand, guys. If you didn't, please watch my other videos on my channel. I highly recommend you to do that. You just need to backtest it. It wasn't easy for me at the beginning. Like, it took me a long time to understand, wow, what is this order block like? When should I take my trade? When banks and institutions are taking their trade? So what should I do right now? Support, resistance, supply, demand. You know what I mean? I know it's not very simple in the beginning. I had the same feeling, but you just need to backtest it and then watch more videos to understand how this strategy works. Okay, so I hope you know what the support and resistance levels are. We're talking about supply and demand right now. As you can see, I took my trade here, and now the price is probably blasting even higher. See, the price is going higher and higher, and then even in the middle, it's creating more supply and demand zones. So we're not going to deal with that anymore, because once it's tapped, we don't take any trade if the price comes back to that level again. So one time it's and then it gets expired. It happens that if the price comes back to that high probability order block, then it works again, but I prefer not to touch it anymore after the first touch. So even right here we have a high probability order block. Look at this bullish engulfing candle. It's a huge push towards upside, and then we wait for a next candle after that. See, there's a gap in between this candle and this candle that is before our huge bullish engulfing candle. So there's a gap in between. So what if you want to take this trade? You can wait for the price to come back to this level and then tap into this zone, and then you can take your long position, or you can use Fibonacci. If you want to use Fibonacci, this is how it works. It's probably around this area, 50-60%, but we'll see what happens. Or it probably doesn't even touch that level anymore. So just wait for the price. You see that it never came back, but you just need to remove everything and you do it one more time. We have another Fibonacci level here. We have our 50-60% here. We have a momentum here, but we'll see what happens. See, guys, if you wanted to trade based on Fibonacci, you could take your position here, put your stop loss here, your TP here, 1-to-2 risk reward ratio. Awesome. So if you mix all these strategies together, that would be great, guys. If you want to stick to strictly to one strategy, I would say like it works if you want to trade solely based on supply and demand areas, but it's always good to have more options, to know Fibonacci, to know support and resistance, to know where liquidity is, to know where banks and institutions take their trades. It's very good to know this, and then you can mix it. Then you can just take your trade and be done for the day. If you're a scalper, just get in and out of a trade in 20, 25, 30 minutes, you are done. And this is the difference between support and resistance, guys. I hope that you got some value from this video. If you did, give me a thumbs up, subscribe to my channel, and turn on the notification bell, so next time when I upload a video, you get notified super fast. And if you have any question, drop your comment here. I personally get back to you and respond to all your comments and try my best to make a video based on that. And by the way, if you want to trade completely hands-free, you don't want to get involved in this crazy strategies, you want to be consistently profitable, I highly recommend you to grab Goldie Incubator. It's a trading bot that we recently developed. There's a live results for that on my FX book. Go check that out on our $10,000 account. It's doing great. So far it gave us 4% profit in less than a week, in the first week. It was crazy. It's crazy. We didn't do anything. We just literally installed it on our MT4 account, and it's just running the trades itself. It's trading during London session. It's very good. It's only trading gold, and it knows what the strategy is. Like, it's perfect if you want to trade completely hands-free. And our servers have limited capacity. If you want to grab the license, do it right now before it gets filled up, and then email us your account number so we can manually activate your license. So thank you so much again, guys. I hope you crush it with your profits, and see you next time.